Plan design. So basic life insurance, typically term insurance that does not accumulate any cash value. Group coverage stays in force while the plan is active and the member is eligible. Therefore, it's important to note that it doesn't replace the need for individual personal insurance. Most plans offer an amount of coverage representing 1 year's annual salary, but the formula may be a flat amount, which is typical for hourly staff due to the lower variability of incomes amongst the cohort, or multiple of earnings, which is typical for salaried staff because of the possible variability in amounts within that cohort. Basic plans often include an overall maximum ceiling of coverage and often include a ceiling or maximum amount members are eligible for without any health questions. This is referred to as the non-evidence maximum. This means that members will have to voluntarily supply evidence of good health to qualify amounts between the non-evidence amount and the maximum amount based on their own incomes. Waiver of premium is a feature. Think of it like a mini disability policy that will relieve the policyholder and member from requiring to pay premiums during periods of illness or injury due to a qualifying condition until the earlier of a return to work or termination. Most life plans have a reduction clause of 50% at 65, and many group life plans have a termination age of 65 or 70 years old. This is a fallback from historical practices of mandatory retirement, but with the current working environment, we are seeing issues regarding termination ages. Upon termination, a plan member has the right to convert their life insurance coverage to an individual plan, provided they are under the age of 65 at time of conversion. The Canadian Life and Health Insurance Association has set out guidelines around conversion options and products for participating members. While there's no evidence of health required to convert group insurance to personal coverage, the choices are limited and very expensive since the providers assume poor health risk for those that convert. If someone is in reasonably good health, we do strongly recommend they attempt to apply for coverage with medical underwriting and then as a fallback pursue the conversion based on the underwriting results. Many basic life plans allow for a conversion of coverage at reduction in coverage, for example at 65, or at termination. Basic accidental death and dismemberment plans typically mirror the basic life insurance coverage. AD&D, as it's referred to, provides supplemental coverage in case of accidental death, but also in case of loss of limb or use. AD&D plans can include ancillary benefits, including injury caused by a seatbelt, repatriation of a body, rehabilitation costs, home and vehicle modifications, transportation of family members, and tuition and education benefits. Most current contracts that have been placed in the last few years would include many of these features. Typically, coverage terminates at the same time as basic life insurance, and since the costs for AD&D are a fraction of the cost for basic life benefits, many policyholders seek to increase the AD&D coverage to higher amounts to help offset catastrophic events. Optional life insurance and AD&D coverage may be available within larger groups and is often sold within units of $10,000 up to a maximum amount, say $250,000 or $500,000. Optional coverage may be available for the employees as well as eligible spouse and potentially children. Coverage is fully medically underwritten, which often entails a health questionnaire that must be provided by the provider to the participants and underwritten by the insurer. Coverage is typically terminated at the same time as basic life insurance, and as with conversion, optional life and AD&D coverage priced based on a subset of risk, which may result in individuals paying more than they can secure with personal life insurance coverage. Term insurance coverage really is a commodity these days, and pricing is often improving, even though rates increase with age, which is why we often recommend individuals seeking additional coverage look at external options versus the group plan. Benefit plans can often include features like dependent life insurance, which covers the plan member's eligible spouse and dependent children. It's common for plans to include $10,000 to $20,000 for a spouse and up to $5,000 to $10,000 per child. Typically, children are covered from birth, but some plans do cover from 26 weeks gestation, or some plans from 14 days from live birth. Due to the sensitivity of the potential claim, it's really important for plan sponsors to understand the coverage and look to reduce or eliminate potential gaps. Coverage for dependent life terminates based on the employee's age or eligibility, which must be understood if there's a significant age gap between the spouses. Salary continuance is a program that an employer may implement to self-insure short-term disability. Under salary continuance, the deemed disabled employee continues to receive full or partial paycheck from the employer. The employer may require proof of disability once the employee is off for a period of 2 to 5 business days. And due to the issues surrounding privacy, it's often recommended an employer use a third-party adjudicator to provide and establish eligibility and manage the claim, as well as assist with accommodation or return to work. Professional management can make a significant difference in the duration of an absence. Short-term disability is really intended to replace employment insurance and can be underwritten on an insured or self-insured basis. Benefits can be payable for an illness or injury and are paid weekly for a maximum period of, say, 17 to 26 weeks. Benefits are often paid as a percentage of pre-disability income, typically 60 to 70%. Short-term disability provides coverage during the waiting period for long-term disability where applicable. Disability benefits received by a claimant will be taxable if the employer pays a portion of the premiums, and non-taxable if the premiums are fully paid by the employee group. Benefits may begin immediately in the case of accident or hospitalization, or after, say, 7 days in the case of an illness. Short-term disability plans meeting a minimum standard of 7 days illness or injury as a waiting period with 55% replacement up to the employment insurance maximum sickness benefit will qualify for an EI reduction in rate, which can equate up to $182.50 per employee per year. Now, 5/12ths must be shared with the employee group through direct payment or in lieu of paying premiums for other benefit features. Another approach with short-term disability is to have a supplement to the EI benefit, known as a top-up or a wraparound. A top-up would do just that, top up EI benefits to reach a higher payout rate than the 55% EI provides, or provide protection on incomes above the yearly maximum pensionable earnings, which in Canada is $51,700 in 2017. A wraparound would pay where EI does not. For example, during the first week of the waiting period, EI requires a 7-day wait, or after the 15-week maximum payout that EI provides, potentially filling the gap between when EI stops and when long-term disability kicks in.